Kristen King from the Investing Channel, and welcome to IPgO, the show where we take a look at the IPO world, past, present, and future. We've had another interesting week in the IPO and new issues market, with two much anticipated UK IPOs capturing Wall Street's attention for a change. Danish consumer review site Trustpilot listed in London last week, raising $655 million. Trustpilot listed at £2.65 per share and traded up to £3 on its debut, although the stock price has since fallen back and sits below the IPO level. Staying in London, food delivery app Deliveroo confirmed that it will list on April 7th with an IPO worth between £7.6 and £8.8 billion. U.S. e-commerce giant Amazon was an early investor in the business and holds a 15.5% stake in Deliveroo, worth approximately $1.4 billion. Amazon will sell down its holding by around 4% in the IPO, raising up to $140 million in the process. California-based venture cap fund Index Ventures is also a major shareholder in Deliveroo. Its stake of just under 150 million shares would be valued at $878 million at the midpoint of Deliveroo's IPO range. London's fintech and startup scene has continued to attract investment from U.S. money managers over the last year. The scene is also under the microscope of deal-hungry SPACs here in the U.S., who view them as a source of acquisition targets. Speaking of SPACs and transatlantic deals, Kingswood Acquisition Corporation has expressed an interest in UK money manager Lombard. Lombard, which has around $56 billion in assets under management, is currently owned by US private equity giant Blackstone and could be worth around $828 million. Kingswood Acquisition's backers include two UK-based money manager firms. Whether Blackstone is interested in selling remains to be seen. However, it is said to have engaged Bank of America to advise on any deal, so watch this space. Returning to this side of the Atlantic, smart TV maker Vizio is coming to the market. The business is best known for its mid-market TV screens and displays, which it sells through big box stores such as Costco and Best Buy. It sells plenty of them too, generating revenues of $2 billion from the business. However, it also has a growing ad stream business that runs on its proprietary operating system, SmartCast, which provides users with access to major content streaming services. Vizio believes that consumers will be prepared to watch streaming advertisements to help offset the cost of subscription services. That idea has got Wall Street interested, not least because the service grew by 133% last year, generating revenues of $147 million as it did so. Vizio has an indicative IPO range of between $21 and $23 per share and will raise up to $174 million through the sale of 15.1 million shares. Vizio came close to listing back in 2015, but pulled its IPO following an unsolicited bid from a Chinese rival. This time around, the issue is being managed by JP Morgan, Bank of America, and Wells Fargo. Never too far from the headlines, commission-free share trading app Robinhood has confirmed that it is to go ahead with its IPO and has filed documents accordingly. The business will float on NASDAQ, and the issue could come within the next 2 or 3 months. However, the timetable will likely depend on how quickly the firm can resolve regulatory and legal issues arising from January's short squeeze in GameStop, when Robinhood controversially suspended trading in the stock. The firm is in ongoing discussions with regulator FINRA over a resolution to the issue. Self-driving truck startup TuSimple is steering a course towards the markets with the news that it will seek an IPO and will also choose NASDAQ as its listing venue. TuSimple is backed by a consortium of auto industry names such as Volkswagen, Goodyear, and Navistar, as well as freight company US Express. It's notable that TuSimple has decided to go down the traditional IPO route and not reverse the business into a SPAC, as many of its EV and autonomous driving rivals have. There are no financial details about the issue as yet, but the provisional ticker TSP has been assigned, and Morgan Stanley, Citigroup, and JP Morgan have been engaged as lead underwriters to the IPO. SEC filings show that TuSimple had a loss of just under $178 million in 2020, double 2019's $84.8 million loss. Revenues were just $1.8 million in 2020, up from $710,000 the year before, while the business has just over $310 million of cash and cash equivalents in reserve. Autonomous driving and electric vehicle companies are not valued by the markets on the current valuation, but rather on perceptions about their future market share and earnings potential. How well TuSimple's IPO is received when it comes to market will say a lot about investor appetite for new names in this increasingly crowded space. That's all we have time for today. Please do your own due diligence before making any investment decisions.